Hi everyone, welcome to the first ever episode of The Stock Show. Here we take all the financial information available from around the world and we use it to find strong stocks in strong sectors at the right time. And what better way to start our first ever stock show than looking at two of the biggest stocks on the Australian stock market at the moment, Commonwealth Bank and Rio Tinto. First of all, how do we determine if we've got a strong stock? Well, I personally look at earnings growth. If you put your money in the bank, you want your money in the bank to be growing. And so I expect my companies to be growing as well. And I do that by earnings growth. Commonwealth Bank of Australia currently has year on year 26% earnings growth on last year. Now that's a great sign for me. Now I know what you're thinking. Some people say that having earnings growth doesn't necessarily mean that it's a good buy or a strong company. Now that's fair enough. If you have a different method of determining if you've got a strong company, then that is absolutely fine. We're all different. But as far as I'm concerned, it's a win. Now it's all very well having a strong stock, but what about the strong sector? To do that, we look at two things. First of all, we look at the overall performance against the All Ordinaries on a year-by-year basis. And looking at that, the financial sector is not overperforming the All Ordinaries. It's underperforming by about 7 or 8%. However, we also look at the fundamentals and the overall sector earnings per share growth. We can see that the banking sector is actually growing at a rate of over 25% earnings per share year on year. So that's a good sign. Does that mean that we have a strong sector? As far as I'm concerned, it's a win. Now it's all very well to have a strong stock in a strong sector, but what about at the right time? Well, let's have a look at the chart because we need to determine if the price is heading upwards. Now as you can see, you can just look at the chart and see that the price is heading upwards. Just simply have a view. If you think that the price is heading upwards, chances are it is. We've all got eyes and we can all see this sort of thing. However, you can also use solid back-tested entry rules. And in this case, if we were to use a trend line, we can see that the stock has actually crossed that trend line. And that would be considered an entry rule for some people. So is it a strong stock in a strong sector at the right time? Last one's a win as well. Now obviously, if you're going to buy any share, always set a stop loss or a point in the share where you absolutely will get out if you're wrong. A great idea is to set it 10% below your buy price. Other people use different methods and all of them will work at some stage or another. But make sure you use that stop loss. Now it's time for a viewer letter because they've written in and they've said, "Dear Dave, absolutely love your website. I've held Rio Tinto since I bought it after the global financial crisis in 2009. However, I need some more money in cash and I'm wondering if I should sell Rio Tinto. Thanks again, John." Now, John, I can't tell you whether you should buy or sell Rio Tinto, but I can tell you if it's a strong stock in a strong sector at the right time. Let's check it out. Now, as you can see, Rio Tinto has earnings growth of negative 56% at the moment. However, its projected earnings growth is over 70%, around 80%. So this is an excellent sign. If that comes to fruition, we'd consider Rio Tinto a strong stock. But is it in a strong sector? Let's have a look at the All Ordinaries. How has it performed? Yes, the materials sector has outperformed the All Ordinaries by over 10% over the last year. So that's a win. And also from a fundamental perspective, the materials sector earnings per share has grown on a rate above 30% per annum. So what do you think of that one, guys? That's a good sign. Now, is it at the right time for Rio Tinto? Well, as we said, all we have to do is look at the share price. Is the share price heading up on a weekly chart? Absolutely, we've got a definite uptrend there. Now, obviously, if you're in this stock, you could set yourself a trailing stop loss. Again, below 10% is a really easy way to do it. 10% below the price that you're currently in at, or below the highest price of the share that you've currently been in the stock at. So is that a win? According to those rules, yes. So guys, thank you so much for joining me for the first ever stock show. It's been absolutely great to have you. Always remember, there is no holy grail. If you're going to buy a stock, always wear a stop loss. Until then, happy trending. Time for me to go.